Boom, we are alive, ladies and gentlemen. Thank you for joining us today. We're going to be dropping in and taking a look at Bitcoin and the overall crypto markets, which are almost unanimously across the board green today, which is always exciting to see. And I'm going to share with you my insight as to why I do not think that this bull market is over. And then as a matter of fact, that this is just a mid-range accumulation cycle. There are significantly large interests here. And when they show up to play, they know how to do a few things that most retail investors do not, usually looking at a long time horizon and investing based off that thesis. So what we're going to do is we're just going to dive right in. As you can see on the screen right now is a colorful Bitcoin chart on the daily. You might say, Tio, this chart is so colorful. What type of data should I take? Well, first and foremost, let's take a look here. This range, this VPVR on the right-hand side, and this one here. We're currently stuck in between this. Now, it's very likely that we're going to try to fill this gap a little bit more before going higher. Now, there is a potential that we could dip down to $28,000 to $24,000, and that would be amazing. It would just offer us another opportunity to buy more Bitcoin, although I do not believe that is extremely likely. One of the things that's super fun is if you go to our private group, which I suggest you do, by going to arcanebear.com/private and signing up for our community. Because remember, the average investor's sickness comes from over-emotional trading and lack of education. And the way to cure that is by joining a group of people who are focused on solving those problems, who have been in the market long enough to understand how the market tries to take advantage of you. One of our private members shared this. This is our Arcane Bear reaccumulation schematic 2. And this is what I believe we are witnessing, which is what appears to be a double top to the average bear. To the more intelligent bear will appear almost exactly where we are today in Phase B. Now, Phase B could have us come down to the $24,000 to $28,000 mark, although I don't think we're going to see that. We've just seen too much pressure in accumulation. And if we look at our charts here, what we can do is we can compare this to the S&P 500, which we have down at the bottom, and Bitcoin up on the top in white. Now, for the S&P 500, between the years of 2000 and 2008, you had what were both considered market collapses. Now, after both of those market collapses finished, the S&P 500 continued up consistently, onwards and upwards for actually a significant period of time. If we drag the S&P 500, so it's a little bit more visible here, and we take a look at where we are today and compare those two, you can now see what that accumulation range for the S&P 500 did subsequently. It broke out and continued. Now, what's really interesting here is that there's a high potential that once Bitcoin breaks out of the $64,000 range, it's just going to continue onwards and upwards for a significant period of time, that there won't be a whole lot to slow it down. So pretty much anything within this range, in my opinion, is a great place to accumulate. Now, again, as with any trading range, there is a gap around 20,000 to 30,000 that could get filled. It would probably happen very quickly. If you did not already have orders set there, the chances of you getting in at that price would probably is non-existent. So again, when we start to compare what these two accumulation ranges look like in the intermediate, we really start to feel this idea of scale and variance that I've talked about so often, is that when you're looking at accumulation ranges and you're looking at long-term time horizons, it's the investors who are not interested in the day trade or the short-term gains, but those who can see the next 5 to 20 years ahead of them that really do the best in the market. It's one of the reasons why I think what Michael Saylor is doing as a strategy is so important, is because it teaches the average investor what they should be doing. Now, it's always a little bit convoluted. You're like, well, Tio, but if I sold at the top at 64 and I rebought back at 30 and I sold again at the 60 and I rebought back in at again 30, it's basically almost impossible to do that. And the reason is the market has learned how to take advantage of those exact emotions. You'd think, hey, look, guys, I fucking figured it out. Buy low, sell fucking high. This is so easy, right? Like, I'm a goddamn genius. The problem is, no matter how smart you are, the emotional dialogue is the most difficult, and that's what the markets have spent more than your lifetime learning how to take advantage of. The emotional the incongruencies within the average investor, which is, again, buying low and selling high sounds easy, but if it was, everybody would do it. In fact, it's not. Those are the things that are taken advantage of by the market so that you end up usually failing. And that's what we don't want. We want you to be as successful as possible, as easy as possible. And one of the best ways to do that is focus on an accumulation strategy for a few reasons. Number one, the bull market in Bitcoin is deceiving. And when we went from 3,000 to 20,000 back down to 3,000, if you didn't sell at 20,000, you'd maybe felt like an idiot. Well, how about the first time I bought Bitcoin? It went from $90 to $1,000 back down to $200. And for that brief moment when it went from 1,000 down to 200, I felt kind of stupid because I didn't understand the macro thesis. The macro thesis says, hey, ignore that. You have a great asset on your hands here. Buy it at any price you can get it at and do that every month for the next 3 to 4 years. And between the years of 2013, 2014, 15, 16, 17, before the bull market continued, that's what one should have been doing. Although that's not what I did. I waited till the very end when Bitcoin is around 200, 300, 400, 500, 600, and I started buying again, which was great. The strategy should have been repeated month over month for that 2 to 3 years while nothing was going on. Currently, Bitcoin has been going sideways for approximately 403 days. In my opinion, we are about halfway through this accumulation cycle, and we had talked about this previously. We talked about the idea that when you're going through an accumulation range, anything below Bitcoin's previous all-time high was a great time to be buying. If you look from the $1,000 as it came back down to 200, if you stayed consistent with your strategy, you were able to beat the market by joining the waves that it was creating. Too many people try to beat the market by thinking, hey, look, buy low, sell high. That's fucking easy, right? It's not. Because it's taking advantage of your emotional incongruencies and things that you will get wrong as an investor, when as a matter of fact, the best thing you should be is just going buy every step of the way that you can, because over the next, let's say 300 days further, which will put us into May 2022, Bitcoin is likely going to continue and break out of this range of around 60,000. And if it does what the S&P 500 did in any similarity, we're going to see Bitcoin at a few $100,000 by 2024, 2025, 2026, and 2027. So why not remain patient and understand that when we're looking at these accumulation cycles, this is probably one of the most valuable ways. Now, again, on our schematic here, there could be a drop down to 28,000 and 24,000 just to try to scare everyone. I don't necessarily think that's the case. If you look really closely right now, we're about to break above our previous high. So here we were at around 44,000. If we break to 48 to 49,000 and hold above there, it's a very, very clear indicator that we're just going to continue onwards and upwards with a lot of strength. But most average bears are going to think, oh, a double top, the same way you would have thought if we had looked at the S&P 500 between all those years and like, oh my God, this is a double top, the market's done. The reason why people get this wrong is because they don't understand the fundamentals. Your governments are destroying the currencies that underlie all these assets, and the prices will likely continue upwards and maybe what would basically seem like forever, because our lives are quite short. The market has outlived and will outlive all of us, so don't get your panties in a bunch when it does things that you're not accustomed to. Avalanche is another one of our favorite assets, and it's actually been giving us some strong indicators. I think using Avalanche as one of our leads right now is a really smart idea for a few reasons. Number one, I don't think most people understand what Avalanche is in terms of technology. Now, we could make some arguments, and I'd be a little bit of my comfort zone because I'm not a technologist, but from what I understand, Avalanche brings a lot of really unique ideas to the table. It's why we were bullish on Solana and Avalanche to begin with, is that they are actually able to outperform what Ethereum is doing and then trying to do by upgrading itself. Avalanche has most of that already built in, so why wait for a car that's not working when you already have one? And larger interest started to take a big position in Avalanche around the $10 to $40 area. The fact that we came down to $55 before jumping up another 50% almost, I think is a clear indicator that that bottom that we hit was the previous bottom of those large interest accumulation. Now, the other thing that's really interesting here too is that this 3 peaks and a domed house usually returns to 0.10, which is around the $55 range, which we did get. Now, as we start to look a little bit closer right now, we are locked up between not just our Bollinger Bands, but our exponential moving averages at the top and our simple moving averages down here at the bottom, the 200 in the green and the 314 day in blue. Now, again, there is reason to believe that we could see a quick spike downwards of around $52 to $40 Avalanche, somewhere approximating that $28,000 range for Bitcoin before continuing higher. What should not be missed here is the idea that this is advanced technology that is under-recognized for what it's capable of doing, and those large interests don't want the price to go too high too quickly. So their ability to buy a bunch between $10 to $40, as you can see by the significant volume bars here back in August, took place. And again, they're holding this interest here around $50. We bounced and wicked right out of there super fast. So I'm looking for a close above $92 Avalanche. Once we close above $92 on the daily here, I suspect we're to continue upwards quite quickly. Now, again, there's not a whole lot of room for downside. Let's say 40%, which feels significant. But if you do the long, drawn out conversation that we've been having around Avalanche when we started to tell people to buy it around $1 to $3, and then again at $12 and $4, or approximately that first trading range between $4 and $12, and then we came all the way back down to $12 to $20 and are back at $80. The hard part is that ride, and the easiest way to ignore that price fluctuation is just by focusing on a long-term strategy. So ditch the problems of the early investor and the sickness that comes with that over-emotional trading. Join the private bear group, ladies and gentlemen, and you watch your profits increase significantly because you will have removed the emotion that normally wreck most investors. Now, if we go back to the right-hand side of the screen here, we open it up. Across the board, we are seeing green. Total market cap is up 4.5% across the board. And then you're seeing averages of 3 to 10%. Avalanche up 8%, Solana up 6%, Rook, Woo 10%, 1inch 3%. This to me is showing a significant bottom bounce in the entire market, and Avalanche, I think, is a good leading indicator for extremely advanced tech unrecognized by the average investor. We're going to see this bull market continue. Now, there's a bunch of other reasons we could go over, which we will add one or two of at the moment. So let's take a look at just the S&P 500 to kind of close out today. Now, the S&P 500 is not looking super hot. We had a nice quick bounce up to around the 450 point, although this is the EFT Trust, so it's a little smaller than it would be just the S&P as a whole. I suspect, again, we could come down to around 417 points. So there's this indicator across the board that both on Avalanche, the S&P 500, and Bitcoin, that there's room for us to come down to $28,000 Bitcoin, let's say $40 to $50 Avalanche, and for the S&P 500, put us around 406 to 417 points. So because there's general potential for further downside, we need to address that idea so people don't get scared when we go there, but also understand that one of the reasons why I'm so bullish is that this reaccumulation schematic is not just backed up as a technical, it's backed up as a fundamental. Here we have the percent of balance on exchanges for Bitcoin right now. And during the previous market cycle, during the previous price cycle down, where we went from 64,000 to 30,000, you can see this massive increase in supply here that correlated with the price dropping. But now you have the opposite. You have significant interest accumulating Bitcoin, and supply keeps falling day over day over day. This is what we would call bullish divergence between supply and demand. Too many people focus on price and ignore the supply and demand characteristics. The supply and demand characteristics, actually, let's move my face over here a little bit because I'm sure it's in the way. Boom. Yeah, so as you can see, Bitcoin has been, the supply on open exchanges has been going down and down and down as time goes on, yet the price has been remaining rather stagnant. This, to me, is a very strong fundamental indicator that Bitcoin is going to continue its price momentum upwards, even if we see that slight price dip down to 28,000, again, to scare the average retail investor into selling. People that think we're in a bear market haven't recognized that we've actually been in an accumulation cycle. And this is one of the things that I think is the strongest indicator for those who have been watching, is that if you go back and you do your homework, when anything below Bitcoin at $1,000, even though that was the previous all-time high, was a great price to be buying. Now, again, if you had bought at 1,000 and watched it go down to 200, you might feel stupid unless you knew what you were doing. And fixing that, saving yourself those problems, is one of the easiest ways to become a successful investor, because then you're playing with the market instead of trying to beat it. And trying to beat something that is older than you is very difficult to do. It's like trying to beat the ocean. So don't do it. Just enjoy the waves and ride them. Here, I believe we are going to be headed onwards and upwards to a new all-time high in a very near and short distant future. So why not just focus on accumulation? That's what we're doing here at the Arcane Bear. And although it's a little disconcerting to always see prices of portfolios drop 50%, it's part of the game. And that part of the game is designed to get rid of you. And if you follow what big investors have been doing and will continue to do, it's get those good assets at any price that you can. So if you bought at 1,000 and watched it come down to 200, keep fucking buying. This is how you average your price out and how you end up with a logical strategy that gets rid of all the emotion. Anyways, we'll leave it at that. Thank you all for joining us today. This is Tio with the Arcane Bear. I hope you guys found this valuable. Follow us on all of our social media channels, links, Twitter, YouTube, wherever it is you might want to find us. We're constantly posting there. But most importantly, if you have not tried the private bear den, go ahead and sign up for that. Links down below, arcanebear.com/private. We'll see you guys again on the next episode.